metals. Get out of those digital bank accounts that can be drained and go bankrupt, and own something. So I think that could be a big movement towards the gold space, and also towards Bitcoin. People are getting away from the dollar, digital dollars and banks that can go under, and moving to physical or the crypto.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. It's March 4th, 2024. So that makes it 3/4/24, whatever that means. But importantly, two major breakouts taking place. Number one is gold, broken 2,100 for the first time ever. And number two is Bitcoin. It's up to very close to its all-time high, depending what indicator you read. It's somewhere 67.5, 67.7. Right now, it's at 67.4. It's also breaking out. And Chris Vermeulen is with us now. And Chris, it's been a while. Hey, we want to get your perspective, charts, technical trading. What's going on here? And by the way, if you got a question for Chris, myself, and you should at this point, the email address is kl@kerrylutz.com, and please send. So gold, let's talk about gold first. That's what everybody's talking about. What are you seeing?
Yeah, well, great to be back on the show, Kerry. Obviously, we're starting to see gold break out and start a pretty big run. Based on technical analysis, going back different time frames, in the next stop for gold, if it can hold above 2,100 and hold its ground here, I think we're going about 2,300 is going to be the first stop. So I think we could see a multi-week run here to the upside. Looking at the bigger picture, stepping back actually shows gold running all the way potentially to 2,700. And this could happen in the window going maybe into May. So this is over the next few months, which is pretty exciting. We've been waiting for gold and the precious metal space to come to life. Gold has been holding up the best, simply, I think, for a few different reasons. In my opinion, it's definitely a very solid, slow-moving investment. I think people like something that's not very volatile. They can put more money into it without it causing a lot of emotional stress. And people who buy gold tend to just hold it because it generally moves really slow. It's not something you flip right away. And investors in gold are the buy and hold more or less mentality. So gold has been holding its value, keeps going up. And from a technical standpoint, I mean, it's in a very strong uptrend, not only on the daily and weekly chart, but also on the monthly and the yearly chart. We are in a very strong market condition here for gold, which we saw this back just before the 2008 the 2008 market top. We saw gold, silver, and miners explode and rally for several months and really rip to the upside. So I think we're coming into something similar to that. I've talked about that a few times over the last month or two, that this is starting to unfold, and we might see a very nice run where people start to pile into the precious metal space for several weeks or a couple of months, and generate some good potential here. All right, I think we're good. I kind of answered that question on gold. My outlook.
Okay, so gold going higher. You think this is a multi-year super bull market for the yellow metal?
I think it's a multi-week, multi-month. I think this could be a nice push higher. I do think eventually we're going to see the stock market run out of steam, which you and I can talk about in a minute. But all the signs are there that the stock market's starting to run out of steam. And if the economy and the stock market starts to head down and we go into some type of recession or bear market, I think we're going to see gold pull back. But I do think gold metals are primed and ready to run for several weeks or a couple of months, and then it'll take a breather and a pause. But I do think we are in a super cycle for gold. I think it's going to rally overall if you were to look at the yearly chart or monthly charts for several years. But right now we're on a push higher, but I do think we'll have a fairly sharp correction probably later this year, which will probably be one of the last opportunities to kind of get gold before I think it goes into the multi-year rally, as you just mentioned, which I think is going to be very significant. You're looking in 3,000 plus for gold
Really?
going forward.
Wow. So that much, huh?
Mhm.
$3,000 gold, huh? Well, we've been waiting a long time for this day, Chris, and it looks like it's finally getting closer. And what can stop it from going higher at this point?
Yeah, I don't know. I think there's a wall of worry. I mean, the VIX has been slowly creeping up all year. As people get nervous, they move to defensive plays. Gold is, I don't know what's going to take the wind out of the sails at this point for gold. It just has a lot of momentum behind it. The only thing will really be a stock market correction, a recession, forced liquidation, panic. When there's panic in the streets, everybody just sells, and that will pull gold back. But a lot of things are favoring, the rising gold price with banks, banks struggling and going out of business. People are worried about losing their money, so they're moving to physical. That could be one of the reasons why we're seeing this big pop in gold the last couple of trading sessions.
So you think there's some panic starting there? I mean, I read there is another bank or two in the U.S. that seem to be having issues, shall we say?
Yeah. Well, I mean, I think it was on Friday you were mentioning earlier, there's a big sell-off in one of the banking stocks going under. Of course, gold put in a big rally that same day, and it's continuing to rally today. So any sign of the banking system going down, people naturally want to flock to more or less physical metals. Get out of those digital bank accounts that can be drained and go bankrupt and own something. So I think that could be a big movement towards the gold space and also towards Bitcoin. People are getting away from the dollar, digital dollars and banks that can go under and moving to physical or the crypto. So yeah, I think there's a flock to a different currency right now.
All right. So currency, political instability. It is a silly season, otherwise known as the presidential campaign. Do you think that's having an impact here?
It could be. I mean, I don't follow news or any of that stuff too frequently. There is obviously a presidential cycle that goes into play, but it doesn't mean it's going to always move the markets. So again, I really just focus on what people are, where they're putting their money. That to me is the most important thing. Right now, they are moving into gold. They are moving into small caps and growth stocks and technology. We are in what I believe is kind of that feeding frenzy mode where everybody's now starting to buy back into all of those growth stocks. They think a new major bull market has started. And while we are in a bull market for stocks, I don't think it's a multi-year bull market that people are expecting. I think this is going to be a multi-month rally, and then it's going to fizzle out and it's going to go a whole lot lower, 30, 40, 50% for equities. So there's definitely, people moving into this, into the precious metal space. I think just as a kind of a defensive play, because I think we're going to see this market sell off. So I think it's smart money moving into a safer investment.
Okay. What about silver? The two have like really kind of diverged because gold obviously trading at or near or over all-time record highs. Silver still trading like 50 cents,
Yeah.
50% of its all-time high. Does this get reversed? Is it the same people buying silver who are buying gold, or is it a different type of consumer, but both having the same goals?
Yeah, that's a good question. I would say they're more so a different consumer. I think we're seeing gold get accumulated by large institutions, countries. Silver is definitely more volatile. I think it is a little bit of a different group of buyers or traders, more so. Silver definitely lagging. Same with gold miners. I mean, they've all been struggling, and that's one of the reasons why I don't think we're starting the next multi-year rally in precious metals. I think this is going to be a leg higher, but we're going to go back and have a bigger pause later this year, simply because silver's not really joining in on this party, and we're not
And
seeing gold miners.
the miners too. Like maybe it's old school wisdom here, perceived wisdom, but it's generally that moves in the metals don't stick until the miners are supposed to lead the metals, not the other way around. And when when the metals do lead the miners, then we see these rallies often short-lived, don't we?
We do, and that's where there's divergence. We're not seeing the leverage plays behind gold, which is silver and the miners. we're not, yeah, they've had a big bounce in the past couple of days, but really they're just an oversold bounce within a downtrend. They're struggling. They're not really participating yet. They might kick into an uptrend and get some traction, but based on my technicals and trend analysis, they're still trading in a downtrend and actually getting overbought here. So it's going to be interesting to see how they play out, because without them following suit, if people aren't moving into the leverage play behind it, then to me, it's not the real deal, the full big move that's coming. Typically, if we're going to see this big rally in precious metals, a lot of people should be piling into these leverage plays to make a fortune. Instead, they've been really moving in the opposite direction and selling shares. And now there's been a big kerfuffle, I think, with some scandals going on in the gold stock space, which may have added to some pressure, but really doesn't have a whole lot to do with I think the fact that they've been going down for a long time, and silver's just not getting any traction either. So,
Okay, well, that's the weird thing, but is it possible the fundamentals have changed here, Chris?
it's possible. And I mean, anything really is possible. I mean, things just don't always have to make sense, and they don't have to follow what they've done in the past. Nobody would have thought crude oil would go negative. And, it's so things can go completely out of whack. And it doesn't have to make sense. And that's where my type of analysis comes out and kind of really shines, is because we can ignore the news, ignore the presidential cycles and the Fed and all that stuff, and we can just follow price. If price is going up, we're long. If it's going down, we're either benefit from it falling, or we're in a different asset class altogether. So just by following price is so much easier than trying to figure out, have the fundamentals changed? What are people, thinking? What's going on in the news? All that stuff, to me, is just a lot of noise, because no matter what they say, you've got to follow the price action. So whether it goes again, and usually the news and the vibe is against whatever the trend is in that asset. It's a very big discount.
I'll buy it, but it's just a little curious seeing things the way they're going now. Hey, so let's look at oil now, energy. We were thinking it was weak, but right now oil's trading $80 a barrel, give or take.
Yeah. I mean, oil in the grand scheme of things, if you're to zoom way back to, 2005, 2004, go way back there, oil has been oscillating really between like 135, you could say, down to about, $35 a barrel. It's been going back and forth in this massive range for a long time, for 20 years. Right now, it is dead center in the middle of all of that sideways chop. So it is kind of in no man's land, trying to figure out what it's going to do. I think really the whole space, the energy space, is kind of dormant right now. And if we take a look at the energy stocks are actually trading up near the highs. They actually have a very strong chart pattern. So based on oil trading in the middle of its range, but the energy stocks have a very strong bullish chart pattern, is telling me we might see one more rally and push higher in crude oil over the next few months going forward. Maybe we're going to see it rally back up to around $94, $95 a barrel. So there is some upside potential. But right now, in the grand scheme of things, it really is kind of in the middle of its range, in no man's land, without any really clear direction at this point.
Okay. All right. Nat gas, man, it was back under $2. Now it's over $2, but it looks like it's going to lose steam. What's your thoughts?
Yeah, natural gas goes in these massive multi-wave cycles. We had a cycle high in 2022. I think we're coming back down into a cycle low this year. It's usually a 4 year cycle. And it goes over, this goes back the last 25 years. So we're definitely getting down into that oversold condition. It's very difficult, though, for a trader or investor to take advantage of oil, especially if you're trying to trade like the ETFs or the stocks around it. There isn't an easy way to do it. But you look at natural gas, I mean, it is dirt cheap. It is down almost as low as it's ever been. And, I don't think there's a whole lot more downside to it.
Hmm.
But it's just difficult to play the upside because time is very difficult. If you hold on to stocks and if you hold natural gas stocks, we go into a recession or a correction, those stocks are going to go down anyway. If you hold
Hmm.
an ETF for natural gas, they lose value pretty much daily. So over time, the longer you hold it, the more you lose, even if natural gas slowly moves higher. So as you always say, and we always mention, it's a widowmaker. It is very
Yeah.
difficult to trade natural gas unless you're a futures trader, but that's a different game, different sport altogether.
Yeah. Those are people who actually know what they're doing, right?
Yeah, supposedly.
Even them, you'll find them hanging from trees on occasion because they've went into a busted trade and didn't have the good sense to get out of it. But seriously, so uh, I know you don't do a heck of a lot on crypto. You got any opinions on what's happening with Bitcoin?
Well, I mean, Bitcoin's on fire, screaming to the upside, on the verge of hitting new all-time highs. This is one of those things where it, to me, kind of confirms we're in this kind of a little bit of that feeding frenzy. People are piling into small cap, growth stocks, very, very like the ARK ETFs, and they're
Mm,
piling into Bitcoin. To me, it's a very similar type of mentality, similar type of trade. People chasing the money, trying to make a lot fast in the fast-moving assets. Um, uh, Several months ago, I was talking about how I'd love to see this stock market, like the SP 500, hit new all-time highs. That will spark a lot of people to come back into the stock market who were scared to get in last year. They missed out on the big rally. They didn't get in this year until we hit new highs, and then they're like, "Well, I got to get in. I'm missing out on the rally." So
yeah.
right now, to me, the stock market is sucking in everybody who isn't in or not involved in the markets. I'm seeing people who are literally buying Nvidia stocks, their first stocks ever on their phones.
Yeah.
All these things are telling me we're getting into that last euphoric rally in the market. It's sucking all the last people in who aren't in, and they're going to probably end up buying a lot of things at the high. So, last time we saw Bitcoin get up to these levels twice in the past, we did
Hmm.
see a correction of over 50%, both times. So it'll be interesting to see where we go. This is a parabolic move straight up. And generally, when something goes straight up, in my opinion, it comes straight back down, at least for half of that move, which could bring it right back down to the $45,000 mark if we have a bit of a hiccup.
Hmm. Interesting, interesting. Well, time will tell, and it's just kind of fascinating to see the whole thing unwind here. Interest
Mhm.
rates, what do you see in here?
Yeah, the interest rate market, I think rates are going to, I think they're going to hold up for quite a while. I mean, I think they're going to drag out longer than people think. A lot of people have been trying to front run the rates going down. Huge volume in the bond market in terms of like TLT, the long-term bond ETF. I've talked to a lot of different advisors who are told by their senior management, get your investors into bonds. It's just a matter of time before they turn around. And so we've seen everybody pile into them, and you can see it in the volume. And I think that everybody's trying to front run it and get in early. To me, means there's a lot more time to go. I think the rates could trade sideways for another, who knows, maybe another year and change. So if people are trying to front run that, they're going to have a lot of dead money. It's not going to go anywhere if they're playing the bond market. And all that money is going to sit there and waste time when it could
Hmm.
go into a different asset class that is moving. And one of the biggest drawdowns for people who are, trying to front run the markets or the buy and hold is when there is no action, when you're holding something not going anywhere, the biggest cost you can have is a waste of time. And we
Yeah.
don't get time back. We can always make
Hmm.
money back, but we can't get time back. So to have your money locked up in a different asset class because you think the rates are high and they're going to come back down is a great way to waste a year's worth of returns, or more. And you could actually make a lot if you were to not just kind of try to guess when things are going to turn around. Interest rates, very slow moving beast. Real estate, very slow. People do all kinds of stuff thinking it's going to be quick and easy to make money, and it drags out for years when they could have done something else. So I think rates are going to be up in this range, this nosebleed section, for a little while, which really is just normal average rate, but it
Right.
seems expensive because people got so over leveraged and buying homes and different things at a cheap rate. Yeah.
Yeah, it's an interesting world out there for sure.
Mhm.
Any other markets we should be paying attention to here, Chris?
I mean, I really think you just need to, be along the equities market. To me, it's a very simple, straightforward play. I think owning physical gold is a very conservative with some good upside potential. I mean, gold could rally about 20-25% in the next few months, which for gold is a huge move. And to me, it's a low risk play with quite a bit of upside potential. So that's kind of where we're positioned right now is in those type of plays.
All right. Hey, we appreciate the update on the markets and always look forward to speaking with you, getting your opinions on things. Because, hey, from a trader's perspective, it's very important to be able to track these things and have an understanding of long-term versus trading opportunities, short-term opportunities. In any event, make sure you go over to Chris's site, thetechnicaltraders.com, sign up for your introductory newsletter subscription. And if you got a question for Chris or myself in the meantime, shoot me an email, kl@kerrylutz.com. And while you're there at the site, financialsurvivalnetwork.com, sign up for your free newsletter. Chris, we'll be talking to you again real soon. Thanks.
Thanks, Kerry.